Hey guys, how you doing? This is Dan with Legacy Homes. Now, over the last 2 or 3 weeks, I've been getting a lot of phone calls, a lot of conversations is the market crashing? Is it going to crash? Are we going to be seeing a declining market? Before I answer that, I want to be able to look at the data. I want to look at the research, and I want to go back 10 years to kind of see, is what's happening today normal or is it not normal? So I'm going to share with you a couple websites that I have that's going to be able to give us a lot more data than I could explain. The first website is called Altos. They're actually a research company that actually goes on to different statistics analysis throughout the whole United States, as well as real life mortgage loan applications and financing history and so forth. And that company is actually called mortgagenewsdaily.com. Really good resource. It's free. You can check it out. Now, what I want to reference is actually the real estate market according to what the interest rates are. Now, if you look today at interest rates, they're around the 5.25% range. Now, over the last 2 or 3 months, they actually have been fluctuating about 0.25%. So they've been ranging anywhere between 4.5%, 4.875, all the way up to 6%. Now, depending on the price point of the property and obviously the county, whether it's San Bernardino, Riverside, Orange County, LA County, they have different limits and loans for your regular loans as well as your conventional loans, jumbo loans, FHA, and super jumbo, and so forth. So this is kind of what we're referencing, a conventional loan. Now, as we could see, a standard conventional loan, we're going to be looking at our purchase versus our 30-year influx fixed rates over the last 10 years. Now, what we've seen, obviously, in 2021, we actually had a drop in interest rates. So in the beginning of COVID, when it first started, interest rates were hovering around the 3.75%, possibly 4%. Now, when COVID hit, and actually we're in March, February at the end, we started seeing a decline. Now, as you can see, according to this orange line, the orange line shows the index of where the interest rate are, and the shadow behind it, the blue shadow, as you can see right here, is kind of showing the home sales of what the purchase amount is. Now, as you can see, there's an influx, but if you look at the trend, when the interest rates drop, we have higher sales. Okay, well, over here we have anywhere between 1 to possibly 1.25% change. We had a dramatic change from here at the beginning of COVID when it first started, which is right here in the beginning of March, and we had a dramatic drop all the way down to the low 2s, which created a huge spike. Now, the inventory that we currently had did decline. Now, over the last year to possibly 2 years, what do we see? We actually saw the increase of interest rates. And that's where I'm going to influx and actually go back to our Altos report that actually shows that we see a trend. As right here, going back more than 10 years, we see an increase of inventory, as well as over the last 10 plus years, we see a drop of inventory. So in basic economics, we have a supply and demand issue, okay? So not only has the market created a feeding frenzy over the last couple of years, it's kind of created an anomaly. Well, if we look at the statistics over the last probably 10 years that we go through, more referencing the last 7 years, actually we show that there's a normal real estate trend, and we're looking at back to 2016 all the way up to today, of where the market traditionally rises and where the seasonal peaks hit, which is usually around October, as far as the home prices and as far as the home rates and so forth. So right here, we actually see a nice warm trend, which is all the way back to 2019, 2020. We have a really awkward trend, which is known as an anomaly that we're having right now in the real estate market. So throwing that out, 2020, we kind of see our normalizing trend as of right now, 2021, and coming back to a normal market. And obviously we can see in 2022, we're going back to, again, a normal market. So we have an increase of homes availability, as well as we have an increase of prices going up. Now we could see obviously in a plateau over the last, I would say 5 years, from 2016 all the way up to 2022, there's traditionally on an annual basis, year over year, you usually have about a 6 to 8% increase in home prices. Well, obviously we can see right here, just from, shrink down the screen a little bit, from 2020 to 2022, we have over a 20% drop or increase, we're saying. So we actually had an increase of over 20% over just a 2-year time pattern. Now that's actually probably 4 times the national average. So what do we have? An increase of home prices, as well as just recently, we have an increase of here, we have an increase in interest rates. So in dynamics, as far as interest rates are increasing, then we actually have the sales now decreasing, which is right here. We see a plateau of what sales are. That trend is pretty consistent all the way through. So from the purchase part, as far as the purchase index, when we see an increase of interest rates, we usually see a decrease of sales, which is pretty much what we're having right now. Also, a nice statistic that Alto shared with us is actually just in the last 30 days, we've actually had an increase of a 8% hike in homes available. Now, again, this is normal. As you can see a trend, looking right here in January to July, we see in January, the inventory is low, and then it increases, and then it drops down low again in January, and then increases, and so forth and so forth. So what we're experiencing right now is actually an increase of market. So in a normal, healthy market, on the normal seasonal trend, we see that the market usually gets a little more aggressive in the January up until possibly the March area, and then April, everybody starts jumping on the bandwagon. We start seeing a bunch more homes on the market, January, July, or June, July, and then April, September, and then we start plateauing at this point. So as of right now, according to the data that I'm seeing, we definitely are seeing an increase of home prices, which obviously have kind of slowed down a bit. Some areas are definitely more aggressive than others. But some areas are normalizing. I would definitely say there's some areas that are definitely making some adjustments, but that's normal. The real estate market at this point is normalizing. So as far as the data is concerned, we're actually showing that interest rates are increasing. Obviously, it has a direct effect on the home sales. So the Fed's made a statement that they're definitely doing their best, and I don't know if that's a good or bad thing, to be able to slow down home prices, but actually make it more affordable for buyers. So in essence, because they're increasing interest rates, they are slowing down sales, which means that the inventory is slowly building up. And then you go back to basic economics, you have more inventory, less demand. Now we're actually having an influx where it's slowing down the sales, so homes are staying on the market longer, and they're actually homeowners are now starting to panic, per se, and making adjustments on their pricing. Now, only about 25% of the homes I'm seeing on the market are doing price adjustments. Now, price adjustments could be done for several reasons. Either possibly the house wasn't in its best condition and it showed to its best, or possibly it wasn't able to have access, or possibly it was priced incorrectly. I mean, there's several different reasons why it actually possibly would have price reductions. But all in all, we actually are seeing that the market is stabilizing. It is adjusting in certain areas. Now, obviously, in some homes and some areas that have higher demand, or homes that have actually a pool, that actually are pulling a big premium right now, are still selling well above and beyond what they normally do. But other homes that aren't as aggressive as far as buyers purchasing in that area, we're starting to see an adjustment. So it's not a black and white answer right now. We're definitely seeing some home price adjustments because the interest rates increasing, inventory is increasing, but sales definitely have slowed down. So as far as the buyers crush, and basically the buyers jumping out there and paying ridiculous amount, as far as the feeding frenzy a buyer, well, obviously that's slowed down dramatically. So normally prior to this last 90 days, we were experiencing anywhere between 50 to 60 showings on our properties or putting homes on the market, and then walking into the office on that Monday morning after listing a property, and we would actually have anywhere between possibly 10 to 15 offers on the home, which is pretty ridiculous and which is really cool. But as being in the real estate industry for over 2 decades, we've definitely experienced the highs and lows. What goes up always comes down. So we're definitely seeing that adjustment. In the last 30 days, we're seeing more of between possibly 3 to 5 showings over a weekend, and possibly 1 to 2 offers over the next week to possibly 2 weeks, depending on the area, the location, obviously the price point as well. But it's definitely making some big changes. So as far as my opinion is concerned, I think we're normalizing. I think we're going back to a traditional trend on where the market is, and the data is definitely showing that. Do I see us going into a market crash? Well, if we continue in this trajectory, no. But if the Feds come out and make the interest rates be 9, 10, 12, 15%, who knows? Nobody has any control of that part. We may see something a little bit different. But as of today, of May 31st, 2022, I think the market is definitely stabilizing. If you are properly marketing a home, if you're properly showing the house, if the property is in its best condition to be shown, you're still able to sell a property within a 2-week time frame, as well as you're able to get a phenomenal price. So it doesn't really, for me, it doesn't make a big difference of it dropping 1 or 2%, because in the last 2 years, we've gone up over 26%. So I definitely say it's a win-win no matter how you're looking at it, because if you're looking to purchase something, guess what? If you sell it for a little bit less, you're probably going to purchase something a little bit less as well, unless you're planning to cash out, which again, is going to be on a case-to-case scenario. So hopefully I was able to give you some lot of data. This research from Altos did a great job as far as giving a nice presentation as far as what the statistics are and what the trends are as well. So hopefully this is able to help and give you some information. So all in all, if you have any questions or if you have any specifics, feel free to reach out to us or reach out to me. Again, this is Dan Tovar with Legacy Homes, and I do look forward to talking to you soon. Bye-bye.